We'll do a quick market update. I know everybody waits for this. They want to see where the market's going. We're hearing all this stuff in the news about the market slowing down double digits. If you look at this graph right here to the right, the market's gone up 1% so far in May. That's compared to May of last year. But if you look to the left of that, right, where's my cursor? Right there, from 2 years ago, from May in 2020, the market's gone up 183%. So what we're seeing is it's starting to slow down and level off, but our increase has been so huge for the last 2 years that if we level off for the rest of the year, we're still going to end up with a 6 or 7% increase.
Yeah, and you know, Tim and I are loving this market right now for our clients. I know we have a lot of clients that are not very patient right now, because the problem with Tim and myself is that we're so selective on the properties we buy our clients. We go for 100%. What do you say, Tim? Satisfaction or
vacancy?
100% that the property's going to work. Okay, so we don't just go out there and show you a few properties and hopefully you buy it. No, not at all. We're actually showing you one property normally, and you're buying it. And if you're not, we're calling our other investor to buy it. So the problem is that inventory hasn't been there, and when it comes on, there's been multiple offers. And finally, we can tell everybody out there that the multiple offers have basically gone away.
Yes.
Basically gone away. How do we know that? Tim and I have probably sold in the last 30 days 15 properties, bought or sold.
Mind you, on the weekend I went into multiple offers on 2 properties, but it wasn't 20 offers. There were 2 or 3 offers on both properties. So.
Yeah, so they are there a little bit, but it's nothing crazy like it was. But I had this question just before our Zoom. I was up in Post Hill. There's a house up there for 1.6 million, and the buyers, our clients, are saying, well, where do you guys see the market going? And we honestly see it going, just continuing to trend upwards. We're not going to do what Vancouver and Toronto are doing right now, retracting. What's going to happen is we're just going to get a healthy growth rate. Yeah. And that's all we want. We don't want anything to go crazy. We just want Calgary to keep going where it is. Tim, where is the average sitting today?
The average, we're up, if you look at the bottom right of the graph or the chart here, so far from 2021 May to May, it's only up 1.1%. But if you look back 2 years ago, from 2020, the average price is up 18%. So you're looking at 9% a year there. Even if we stay flat, like I said, you're still going to see a 6 or 7 or 8% increase this year. But what they're talking about in the media about double-digit decreases in Vancouver and Toronto, that's month over month. So you're going to see prices, say June of this year compared to June of last year, go down 10%. But in the last 2-3 years, they've gone up, 30-40%. So that 10% drop, if you're in it for the long run, it's just the regular fluctuations of up and down.
Yeah.
But it goes up and down, but gradually goes up and up and up. We won't show it, and we don't have the graphs to show you this week, but in another seminar, we will show you the 75-year trend in Calgary, and it's 3.5% over the last 75 years.
And to be honest with everyone out there, people did go crazy during the first 3 months of this year. We were holding our clients back, saying, no way, you are not paying that for that property. I mean, Tim, we had to walk away from a number of sales just because we cut it off. And then there were other properties that were other areas we went into and saw tremendous value and went in and said, no, let's get it. Let's grab it. This one's a good one. The numbers work all day. I feel sorry for those people that got caught up in it. The best thing to do when you're going through a market like that is to chill out, take it easy, and wait for the right property. And now a couple like Richard and Sydney, we've been working with them, Tim, for four months through this whole boom period. The last 3 months there were multiple offers. Prices were going.
They must have missed out on 8 properties that they offered on.
And guess what? Just last week, I mean, condition days tomorrow. So last week, they bought a beautiful property with every bell and whistle you could imagine. Like, I can't even believe how upgraded this property is within their price range. So there you go. If you're patient and you're going through that, there's no need to get caught up. We say it all the time. A property of a lifetime comes around every week, Unfortunately, during the boom there, it's not the boom, but the upswing, they'll just get snapped up and going 100, 200.
And back to, as I'm talking about holding our clients back, we were in Radisson Heights, which to people who don't really know Calgary, it's east of Deerfoot Trail. It's a bit of a low income community. We went after a property with a client and went to a certain level on our prices. And we cut them off. We said, that's as high as you should go on this house, because after that, the numbers don't work. Some other investor came in with another realtor and paid like 70,000 higher than what we said you can't go over.
Yeah, and next door to Radisson Heights is Forest Lawn. And if you're not subscribed to our YouTube channel, we went down and interviewed a tenant in Forest Lawn so people could see what it's really like owning a property there. That comes out on June 16th because possession is June 15th. And you will see what's going on in that community. I want everyone to watch that because there's investment groups out there that will sell Forest Lawn like it's going to turn over or turn around. Areas like that cannot turn around when you have outreach centers, you have safe injection sites. When these people are in your community, it cannot turn around. So we're here to tell you the straight up goods on where to invest, where not to invest, and what we can tell you that the average is sitting at 517,000 of May 2022. We feel that the average of Calgary should have always been around 650,000. We don't know when it's going to get there, but we know it's going to get there. Historical data has showed us that if you're within 25 minutes of downtown, owning a piece of land, those properties should get there if it's a good community. So we're nowhere near where we're going to end up, and it's going to be fun times. We got to bring Danielle in. She is here right now.
Is she?
Yep, we'll bring her in for a quick update. Here she is. Sorry for I know, Danielle, you're probably so busy, but here you go.
No, it's all good. It's all good. I actually missed the first minute, but I popped on quick. Okay, so I just wanted to briefly chat tonight about how your investment plan can be affected by financing. So I've got a client right now that I've been working with for about a year and a half, a member of Calgary Real Estate Wealth, one of Tim and Azad's clients. And at the start, we had developed a plan to purchase multiple properties. So these clients, just to kind of give you guys an idea, went from owning one property to now owning 4 properties. And we're actually currently working on purchasing their 5th property. So that is a lot, 4 properties in a year and a half. So they're doing this with no debt because we actually refinanced one of their rental properties, took out some equity and paid off their debt. They own 3 rentals. So we're using the infamous fancy rental spreadsheet I always mention to help them qualify. They have a large owner occupied home that's worth about $750,000 that they live in. And their combined household income is only $140,000 from employment. So imagine having an entire combined household income of only $140,000 and being able to purchase your 5th property in about a year and a half. And how did we do it? Because they bought the right properties. You heard Tim and Azad talk about this earlier, making sure you're not just buying any property, but the right property. And we set up the financing the right way. So these clients were amazing. They were like the perfect clients. They took our advice, they listened, they trusted Tim and Azad with the property they chose, and then they trusted me with the financing. They didn't question the interest rates, which were still great rates, but they weren't necessarily the bottom of the barrel rate, because they knew that the overall investment plan was actually way more important than maybe 0.05, 0.1, a quarter percent here or there. So they actually trusted the plan. We outlined the plan at the start on how to accumulate all these properties. They didn't vary and they didn't question. They went with the flow, they went with the plan, and they understood that the long-term plan outweighed asking, hey, can you get me 0.05% lower, or, little things like that. So I cannot emphasize enough, when we come up with these investment plans and work with you to devise these plans, we need to make sure we have specific financial institutions in mind for each property. So we don't just do it blindly and just say, hey, yeah, we can qualify for 4 or 5 properties without knowing in what order are we purchasing these properties, what is going to be the intent for each of these properties, and which financial institution are we using? Because purchasing the property and using the right lender in the right order can either make or break your entire investment plan. Purchasing the right home, but with the wrong financing can derail everything. So as investors, I encourage you guys, I know I talk about this quite a bit, but I encourage you to really think critically more than the interest rate. We need to think about the intent of the home. Is it a long-term hold? Is it a flip? Is it a BRRRR? Is it a JV? Is it a move up program? And Tim and Azad will work with you on that portion of it. And then I need to know what that plan is so that we can make sure the financing is set up properly. But, you know, if you're not working with an investment broker and you want to be accumulating multiple properties, you really should reevaluate that. You need to work with a team that knows what properties to choose, what areas, how are you going to garner the most rental income? Because that's going to help us when we're setting up the financing to help you qualify for multiple properties instead of just one property or two properties. So if you do want to know how much you can qualify for, or if you have been chatting with somebody, but they're not an investment broker, feel free to reach out. We can run some numbers, because who knows, we might be able to get you another one or two properties out of it instead of, you know, maybe only being able to buy one or two properties in total. So being a critical thinker and trusting the plan and trusting in your team is really important when you're investing financing.
Just wanted to know what your opinion on interest rates are and what the buzz you hear around other mortgage brokers. You know, we know there's a rate coming this week. Do you or any other brokers at your brokerage think that rates are going to go up even higher?
Yeah, so I'll do that question, and I'll also answer the question in the chat too, because someone popped on to ask me to answer that. So yeah, as far as rates go, we are anticipating a 1/4 point to a 1/2 point increase on the prime lending rate, which is coming up right away here in the next few days. We're leaning toward the 1/2 point increase. We're still expecting 2% within the next couple of years here on the prime, like so on the variable rate side. There have been some crazy talks of like 7%. I don't think we're going to get there, because I don't think that our buyers can handle it. I would hope that they've learned their lesson from back in the 80s. But definitely we are going to see, like, we're already mid 4% range, depending on the type of mortgage you're applying for. And I don't see that stopping anytime soon. Like, I feel like we'll get to mid high 5s and then hopefully hit a plateau. I was reading an article actually just this morning, and it was just, you know, talking about the market and how what the government has done. Obviously the intent of increasing the rates and overnight lending rate was to kind of slow the market, the housing market in Canada. And we've definitely experienced that a little bit out here for sure. So the consensus is that the slowdown seems to be working. So hopefully they're not going to continue to increase the rates astronomically, where, you know, where we're running into people not being able to make their payments. Because we all know that even though there's the stress test, and the stress test has been around for a couple of years where we qualify you at a higher interest rate, we all know that everybody accumulates debt after you purchase a home, whether it's furniture or you finally go out and buy the car or whatever it may be. So when you come up for renewal in a few years, even though you pass the stress test the first time, you might not pass the stress test the second time. And so it might be tough for people to make their mortgage payments down the road if the rates go up too much higher. So I feel like we'll hit that mid 5% range. And then I'm hoping that it's going to plateau there.
Perfect. Thanks. Yeah.
No worries. And then to answer the question in the chat, so if the investment property you buy is self-contained positive cash flow, can you buy multiple properties on the same income? So I'm not 100% sure I understand the question fully, but let me see if I get this right. So if you are positive cash flowing on a property, when you're actually applying for mortgage financing, the banks don't use, here's your rent, here's your mortgage payment and taxes and heat. Okay, you're positive cash flowing $150 a month, so you can use that $150. It doesn't quite work that way. So the majority of lenders actually use 50% of rents only. They don't use 100% of rents. So then we typically end up with a shortfall on a rental property that we actually have to add in as a debt. Now, there are some lenders, and this is what I was referring to a little bit earlier, who use this quote unquote fancy rental spreadsheet. So that rental spreadsheet allows you to use more of the rent than just 50%. And the calculation in the spreadsheet itself is much more advantageous. So some banks have the rental spreadsheet, some don't. some that do, some are better than others. So that's part of what I was talking about knowing, you know, how do we set it up to accumulate multiple properties to utilize the most rental income. So in your case, you know, if you're positive cash flowing and we put that rental property into Bank A's rental spreadsheet, and we compare it to, let's say, Bank B's rental spreadsheet, we would kind of see, okay, well, which rental spreadsheet's better and gets us the most amount of income out of that property to help you qualify for multiple properties. So it's not an exact, you know, just do an equation. It's actually quite complicated on the back end as to determine what and how much of the rental income we can actually use in the application. I hope that helped answer it. If not, definitely reach out and we can get into more detail.
Yeah, awesome, Danielle. Thank you so much.
Thanks, Danielle.